13. Hello and welcome everybody. It's ICB TV, so it must be Friday again, and it's thank Furlough, it's Friday. We are episode 155, and this is Friday the 13th, but we're not going to hold that against anybody. It's going to be lucky for all of you because you get to share the next hour with myself and obviously with Jackie Mount. Morning, evening, good afternoon, Jackie. How are you?
It's been a long day, Gary.
Yeah,
Good afternoon, everyone.
already, so perhaps I was a bit
Good
too
afternoon,
blasé about
everyone.
Friday the 13th not meaning anything. But anyway, yeah, carry on.
Oh yeah, no, it's been an interesting Friday the 13th today. This one has, but never mind.
Yeah,
that's
absolutely.
beside the point. All right.
So what have you got for us?
Okay, nothing out of HMRC at all. Just a reminder for you that the July furlough claims got to be in by 11:59 p.m. on Monday the 16th. And your August claims are due in by the 14th of September. We haven't got the date yet for the September claims, but as you're aware, this is beginning to slowly run down the system now to the end of September. Fifth stage grants are now should be there to be applied for. We've covered this in great detail, so I'm not going to cover any more on that today. And really, that's all that's come out of HMRC. It's been a very, very quiet week from them today. So what I do want to do, and I did put on the list that I wanted to start raising today, is a follow-up from something I mentioned last week, which is the changes that are coming forward to the self-assessment tax returns. And I'm just going to do a very, very brief presentation on this, and I will take questions if you've got them. But I'm going to do a detailed follow-up on this at a later date, and I'll explain why. So let me just share my screen with you now. And okay, so it is Friday the 13th. I've not had the best of mornings, but that's fine. Nothing to do with anything other than some self-inflicted problems I gave myself this morning. So let's have a look at these changes to proposed self-assessments. As I said, I did mention this last week in passing, and I have to thank a couple of members, Esther and also Claire Kendall. I must thank for spending the time with me this week to go through some queries. I know Claire put up a question last week and I followed up on that with her, and we had a very, very interesting chat about this and the effect this is going to have possibly on our members. And it, on the face of it, like all these things, it looks very simple, but when you start to get into the detail, it becomes a lot more complicated. So at the moment, this is a draft legislation that's going into the new finance bill. So it may be changed, but it will only be the small bits that change. I think this is going to happen. It's going to go through legislation. It does have some knock-on effects that HMRC have probably either not yet thought of or are considering and haven't opened up. But this is at draft legislation stage. So with self-assessment, it only covers sole traders and partnerships and well, not so much individuals, but sole traders and partnerships, and also property income will be slightly affected or could be slightly affected by this. It does not cover limited companies, so it's not self-assessment for micro entities or anything. It's purely for sole traders and partnerships. And basically what's going to happen is from the start of the tax year 2023, so from the 6th of April 2023 or the 1st of April, as I'll explain, all income and profits will now be reported for tax as per the tax year, not the accounting year. Now, as you're aware, you do not need to have your accounting year from the 6th of April to the 5th of April. You can have it from any date. Why a sole trader would want to do that, I have absolutely no idea. There are some historical reasons for it. And partnerships, if it's a large partnership, there might be reasons for that as well. But it covers about, HMRC are thinking about 7% of all sole traders, and up to 15% of partnerships might be affected by this. So it is a small but significant amount, and we've already noted that some of our members will be affected by this. So just a brief introduction now. So what's happening is that the basis dates are going to change so that everyone will pay tax on their income but matches the tax year and not their accounting year. So if they decide they want an accounting year that starts on the 1st of January, their tax will no longer be based on the accounting year, but will be based on their income and expenditure within the tax year dates. Now, this means that something called equivalence is coming in. And what it means is that even though the tax year starts on the 6th of April and finishes on the 5th of April, you can have your accounts run from the 1st of April to the 31st of March, and they will treat this as if it belongs to the tax year 6th of April to the 5th of April. So I'll pick up about the software implications of this in a moment, but any time your accounts will start from the 5th to the 6th of April, and that's purely your choice. As long as there isn't a break in the tax that you're reporting, you're absolutely fine. So you can still have your accounting year differently. So you could still have an accounting year from the 1st of January or the 1st of April if you want to, sorry, the 1st of May if you want to, that's not a problem. Now, it's going to have a knock-on effect, as I said last week, and we're going to bring it in line for the tax returns that will fall into the 22-23 tax year, which is next year, the start of next year. So by the time we start to look at next year's accounts, and I'll do the dates in a moment, we will have to start looking at this to see whether your clients are going to be affected. Now, remember that this starts from April 2023, which is the introduction date for MTD for income tax for self-assessment. This is the quarterly uploads. It's been timed so that all the outstanding queries will have been cleared by the beginning of April 2023. Again, we've got some issues with the 1st and the 6th of April dates, but I'll cover that again in a moment. So just to remind you of where you are, and for those who are doing self-assessment already, you will be aware of these dates. For those that perhaps studying self-assessment, then this will be useful for you to know. And for those who have no idea what I'm talking about at all, please bear with me until we get to the end and we get to the fun bit, which is the question and answers and Gary's update. So now let's have a look at some submission dates. Last tax year, which was April the 20th, April 20 to March 21. Now I'm using April to March rather than the 6th of April to the 5th of April. These are due for submission by the end of January 2022. So this year is the year that you're currently working your tax. If you're doing tax returns for clients, this is the year that you'll be submitting from now up to the end of January if you haven't already done that for your clients, because you could start to do those from the 6th of April. The current tax year, which is we're currently sitting in April 21 to March 22, these are due for submission between the 6th of April 22 and the 31st of January 23. So that's the dates of your submission for your tax returns, regardless of when your accounting year is. And the next tax year, now this is the transitional year that's going to be affected. If you run the accounts from April 22 to March 23, and that's the tax year that falls into that period, or your accounting year that falls into that period, submissions will be due between 6th of April 23 and the 31st of January 2024. Now, if you're running accounts for clients whose accounting year matches the tax year, you have nothing to worry about because nothing is going to change for you at all. Now, all of those above years, regardless of which year it is, have a 10-month period in which to pay their tax, because you will have reported, if your tax year matches the accounting year, you will have reported it. There will always be 10 months in which to pay your tax bill. So from April to January is a 10-month period. Now, if we go back to that January 2024 date, it's worthwhile looking at some other accounting years that are different. So all of these accounts, plus any other dates that you might consider, are all due within that year by the 31st of January 2024. So if your accounting year runs from January to December, what you will report when you will report that accounting year is in the tax year 2022-23, because December 22 falls within the tax year 22-23. So that's what you're reporting. Again, it's due for submission by the 31st of January 24, but there is now a 13-month delay in paying the tax bill from the end of the accounting year, to the date at which the tax is due will be 13 months. Next example is where your accounting year starts in April. So again, if your year runs from April to September, what you are reporting in the tax year 22-23 is actually the accounting year from October 2021. So that's the month after next until September next year will not need to have its tax paid until the end of January 24. So you have a 16-month delay between the end of the accounting year and when you have to pay the tax on that accounting year. And the last one I've got here is when your accounting year starts in June. Again, you're reporting from June 2021 to May 2022. It would need to be reported by the end of January 24. And that gives somebody with this accounting year a 20-month delay in paying their tax by the time the final account. Now, I'm ignoring things like payments on account and what you pay in 31st of July and everything, but this is when your final tax for that has to be paid. And that is a long delay. And one of the things that HMRC are doing, as we've said over the past few weeks, is they're attempting to bring the payment period forward closer to the actual accounting time, the accounting period when that income is earned. PAYE, you pay your income tax the month you earn the money if you're employed. If you're self-employed, you could have anything up to a 20 to 22 month delay in paying your tax. And HMRC over the next 5 to 10 years, trust me, we'll have this all back to a much closer period. So those are the tax dates that we're looking at. Now, what is the effect of this change? For those clients where you have, you're doing accounting year that matches the tax year, so as any sane, responsible sole trader will be, they will be reporting their accounts from 6th of April to 5th of April or 1st of April to 31st of March. There's absolutely no change on this at all. Now let's have a look at those 3 other dates again. If your accounting year starts in January, in the year January 22 to 23, where you're reporting 12 months accounts by January 2024, the effect is that you're going to have to report accounts that extend to March 2023. Okay, so what you're doing is you're not only reporting your accounts from January to December, but you're going to have to add on January, February and March 2023 and report them in that tax return under the year 22-23. So what you're going to have to pay in that next tax bill after this year by January 24 is an extra 3 months of tax. Now, for those of you who do this, you are aware that you've probably got an overlap tax of 3 months, which has been carried forward from the first year you set up your accounts. Because when the sole trader started, what you would have done in year 1 is you would have reported January to March in that first year. In the second year, you report January to December, and that first 3 months of trading, you will have paid a double taxation, and that's called overpayment or over relief tax. And that should have been carried forward in each tax return until either the company stops trading or you change your accounting date, in which case you can claim the overlap relief back. But there are some issues on that, which I'll pick up in a moment. So if your accounting year starts in January, at some stage, there's going to be an extra 3 months tax. The second example was for an accounting year that starts in October. Now, again, when you report in the 22-23 tax year, by the end of January, you are going to have to additionally report your accounts that go from October to March. So you're reporting October to September 22, but you've also got to include in that next tax return October 22 right the way through to March 23. So you're basically going to have an 18-month tax year that you're going to have to report and pay tax on. And the crunch one comes with June 21. And of course, if you're in May, starting May 21, it's another month. Again, you're reporting it as we said before, but now you've also got to report your tax from June 2022, which is start the next year, right up to March 23, which is actually an additional 10 months of tax that you're going to have to pay. But the 10 months overlap can be reclaimed against that. So it may not be as bad as you think. So what are you going to have to do by January 2024? This is what your client's going to have to do. They're going to have to pay all the tax due from the last full accounting year. Now, as I said, if your accounting year is April to March, there's no problem because you're already in line with the new dates. But if you've got an overlap period and you're not matching the dates, you've also got to pay tax on the extended period from the last reported accounting period up to and including the 31st of March 2003, but you can subtract any overlap tax that you've already paid, so it should reduce the burden of tax on that. Now, we've already hit a problem with one client from a member that I spoke to this week who's been a sole trader for 20 years, and we've checked the self-assessment tax return that's been put through, and for a number of years there has been no overlap tax carried forward in the account, so there is nothing to reclaim that can be claimed back. So this particular client, unless we can get to HMRC and they've got proof of any overlap tax, if it's not in the self-assessment tax return, you may not be able to claim it back, and the additional tax return burden could be significant. So what HMRC are proposing is that once they've worked out what the additional tax is for that extra period, minus any overlap relief, you'll have 5 years in which to pay that additional tax. So that will be spread over the next 5 years. Now, that's it in theory. These are the issues that we've identified. And as I say, my thanks to Claire and Esther for going through with me at length this week to discuss various case studies and have a look. The first one to have a look at is the effect on class 4 NICs, because if you think about it, NIC is charged at 2 levels. There's a whatever the level is, 9%, I think, for self-employed. And then I don't know whether it drops down to 2%, but I can't remember. But it may be that by paying on additional profits, it might affect the NIC that you've got to pay. And that could affect all sorts of things like credits, tax credits and everything like that. So you need to be careful on that. Nothing in the legislation says what's going to happen on payments on account, whether that extra 18 months is going to mean you've got a larger payment account to do, or whether they're just going to take it on the tax year. We don't know what's going to happen to the payments on account as yet. Now, this is going to hit making tax digital, because at the moment, the legislation states that MTD kicks in for all accounting periods starting on or after the 6th of April 2023. And as it stands at the moment, if you're reporting an accounting year that starts on the 1st of April, your MTD won't start until April 2024, which is a whole year later. Now, I did read on one of the accounting forums this week that this means that the MTD deadline's got to be changed. Now, I haven't seen that it's been changed yet, but we are going to go back to HMRC on this, because I think what they're doing is they're allowing you to report anything within those 1st to the 6th of April start dates. So my gut reaction is they're going to have to change the dates of MTD reporting, but as soon as we know, we'll come back to you. Now, one problem that we've come up with is software. Now, of the software packages that I know and use or have used, only one of them allows you to report a profit and loss account for a 12-month period, which is different to the accounting year that you've set up. So if you set up your accounting year for January to December and you want to report from April to March, it's not possible to do that at the moment with a simple printout of a profit and loss account. Now, the software companies are going to have to do something about this, because otherwise you're going to end up having to split your accounts and pick up 2 separate sets of accounts. And at the moment, they may be doing this with MTD, we don't know, but this is going to have a huge impact on what the software companies are going to have to do. Now, I did have a chat with a member about possibly changing the accounting dates to bring it forward, so maybe we can get a short year in to solve the problem, but that's not going to work, because whenever you change your accounting dates, if you're taking them up to the 31st of March, you're going to get hit with this extended period of tax. And doing that prior to this transition year of 22-23 is not really going to work unless you're in a low profit situation, because you're still going to have to pay up to 20 months of tax. And you cannot get the time to pay unless you do it in the transitional year, where you can split it over the 5 years. So if you've got somebody that's in this situation, start having a look now, because COVID may have had an effect on their profits that they're paying, regardless of the SAYS grants. Let's take that out of the situation for now. But if in this current year, they're still hit with a period of very low income and hence low taxation, it might possibly be worthwhile looking to do it this year. where the tax is going to be lower anyway. But if you're in that situation, do contact me and we'll talk this through and we'll try and get some ideas flowing to see how we can help. Now, as I said, this is draft legislation. They've put out, HMRC put out a consultation document, which has got to be responded to by the end of August. Now, we've pretty well written our response to this now. It's got to go through the checking procedures, but I've got another week in which to amend this. So if anybody has got any comments on this or points that they want to raise with me, could I ask you to get in touch with me either through the email me if you've got my email address, or member services for my attention marked urgent, or call me next week through the Institute's line to have a chat with this, and I'll talk this through with you and see if there's any other issues that you might come up with that I perhaps haven't thought of, or the members I've spoken to haven't yet thought of. Now, once we know exactly what's happened, I'm going to do a detailed technical Tuesday, because the response, I've got some calculations to go through, and I will be doing a detailed technical Tuesday, but that's not likely to be until October, November time, when we know whether the draft legislation is going through and what its final format is going to be. So that was my week. Let me stop sharing my screen.
Welcome back.
And I'm sure we're going to have some questions coming through. We've got a few coming through already.
We've got a few chat line people here. One or two. Claire Kendall, thank you for your help, Jackie, and a smiley face. Esther, my pleasure to pitch in.
Yeah, both of those have been very helpful. I'm not saying everybody else hasn't, because I have spoken to one or two others, but just to be, yes, I probably do mean effects, not affects. I can never get those two words right, Pauline. Thank you for that.
Kat Cohen says, I have a farm with a year end of 13th of May.
Yeah, again, that's going to hit you. Now, farming is a whole different ball game anyway. Now, with farming, we're not quite sure what's happening in agriculture, because the tax officer for the National Farmers Union, Michael Parker, is lobbying very, very hard for the agricultural sector to be treated separately, and we're all backing him like mad. But at the moment, Kat, yeah, it's going to hit you. It might depend also. And the other thing is that they're tweaking the property income as well to cope with this, because the moment the property income is set from the 6th to the 5th of April. Now, this equivalence period, so you can start it at any stage, I think is going to affect quite a lot of people. The software, of course, I don't know of any software packages that allow you to actually produce your accounts monthly if you've got the 6th to the 5th of April.
I presume they're going to have to make some changes. I mean, the software companies are usually ahead of this.
Yeah.
It's in their interest to get it right, obviously.
Now, that's interesting. Yeah, Naomi's come up and said, I can easily do a 15-month profit and loss in zero, or any length of period. Are there really problems with other software doing this? I must admit, I looked at Xero the other day and couldn't find out how to do that. But if it can do it, that's fabulous. That's 2 of the 3 that I know can do it. I'm not sure about the 3rd one then, but I'm going to talk to the other company in the next week or so to do that.
A bit of ICB bookkeeper skepticism about why they're making these moves, but yeah, I think we can all.
Yeah, no, it's not that at all. What's happening and what's coming out is that HMRC definitely wants to move all their tax revenue closer to the point at which it's earned. So I've already spoken about the MTD and the timely payments. There is a call out for evidence out, or was out, it's closed now, to look at bringing timely payments in so that they're changing the date at which you pay your tax. Now, I don't think it's too cynical of me to say, as we've been saying for ages, that if you look however long down the line, 5 years or 10 years down the line, I think everybody is going to have to pay tax at much closer to the point of income. So what they're doing now is they're bringing the tax payments forward for sole traders in one foul swoop. So everything falls within a 10-month payment period. So with that one transitional year, by then, everyone will have to pay tax on their income up to March, which is due by the following January. Now, once that's in place, there is an obvious opportunity with MTD to say, well, okay, you pay 2 payments on account at the end of July and the end of January and end of July. let's make that 4 quarterly payments on account. Now, there is going to be another transitional year where you're paying your payments on account in arrears or halfway up front, and you're paying for the actual year. So we're not going to see the end of this for a very long time. And these are the developments I think that are going through. And HMRC has to bring its revenue forward so it doesn't have this delay. Now, there are issues with how quickly do you start reporting this? If you're a new business, how quickly do you set this up and start going? All sorts of things. So HMRC don't mind when your accounting year is. Your accounting year doesn't matter. That's a personal preference. What HMRC want is for you to report your tax and income to the tax year. You can have your accounting year whenever you want, and you're no longer going to have to declare your basis dates, because everybody's taxation basis dates will be April to March. And I'm using 1st of April to 31st of March because for me, it makes far more sense to do the account starting at the 1st of the month. So yeah, it's not a ploy, it's happening, but you do not have to change your accounting year. But unless the software comes around, all the software packages allow you to have an accounting year which is different to the tax year and still to be able to bring out flexible accounting dates. The software's going to be there. Oh yes, and Esther did confirm. Thank you, Esther. I couldn't remember if it dropped to 2% after the certain threshold. So that's to do with the NICs. Now, if you report a year's profits, your class 4 NICs are based on the profits over the lower earnings threshold, and you pay, I think it's 9% for the first bit, and over the upper earnings threshold, it drops to 2%. Now, if you've got an 18-month or a 21-month tax period and your profits are significant, it is likely to take your profits over and above the upper earnings limit, which means that the NIC that you pay on that could very well drop to 2%. Now, I've raised this, we've discussed this with Esther, I've raised this, and I'm raising this as an issue in our response, because what will happen is, I don't know what's going to happen to your NIC record at the end of the day, because if you think of what NIC goes for, it goes towards your state pension, income. I don't know whether it affects tax credits. If you're reporting tax credits, how that's going to work, because tax credits are reported either monthly under universal credits or annually under the old working families tax credit or whatever working tax credits there were. So again, I've got to have to look into this, and we will come back to you, but I want to raise this as an advanced warning now, because there is a lot starting to appear now in the online forums on this. So I really wanted to raise it today. Philip has put a question in here, Gary. Might be an opportunity to take on new business. Therefore, I'm considering taking my self-assessment exam. Well, one of the things Gary and I have spoken about is the effect on everybody with self-assessment, because also MTD is going to have an effect on how our members work. Now, I don't really want to go into that in any more detail today, because I think we've still got to discuss this internally, haven't we, Gary? But
yeah, we have to figure out how it's going to work and who it's going to affect. And in fact, we're discussing here about sending out a questionnaire to all the members to find out how you handle your year-end accounts at the moment. Because when we first started, 99% of members actually handed over the year-end accounts to an accountant at some stage. So all of their clients, they looked after them all year, handed it over at year-end. That's changed quite dramatically, but we don't know how many of you now are handling it completely. It's something we've been encouraging for a long time. So I know a lot of you have already jumped in on this. Self-assessment tax returns is one of the big growth areas as far as you're all concerned. And now the level 4 that we do with corporation tax, FRS 105, all of that is really being taken up. It's selling like hotcakes and has been since we announced it. So we need to find out how many of you will be affected by this new proposed change. I have to say it's a proposed change at the moment. So before we can jump up and down and say it's a good thing or a bad thing, we need to make sure that we are singing the right tune, basically. So I think the questionnaire is probably the easiest way of doing that. And I've promised a couple of questionnaires recently, which haven't yet come out, because every time we get it ready, something changes in what we're being expected to come up with. So rather than send you a questionnaire every month for the next 12 months, we thought we'd wait. Well, at some stage, we're going to have to jump in. And I think that will be within the next sort of couple of weeks. We might wait until the kids are back at school and you've got time to answer. It depends a lot also on Jackie's deadlines, because she has a lot of submission deadlines, and we need to make sure we get enough time to get the questionnaire out, get your responses back, and then for Jackie, of course, to assimilate all of those and figure it all out. So we're really trying to figure out what the current ICB bookkeeper is. We've got our own ideas, we've got gut feelings, we've got anecdotal evidence, but we just want to make sure we get it right. So, but yeah, it's all looking a bit odd, and I am speaking to a couple of the other professional bodies who are, a couple of them seem to be just missing the point somewhere along the line, and they don't seem to think this will ever happen. Well, that's what they said about digital accountancy products and everything else. So we will see how that goes. But yeah, Jackie and I are due to have a meeting shortly to try and figure out how to ask the question.
Yeah.
But the trouble is, whenever we work out a questionnaire, we ask a question, and we then get 4 more that we need to ask due to the answers that we've been given. So we're going to try and cut that short.
Eliza's come in and said, many moons ago, this transit to digital was, I'm sure, anticipated, as we were given the opportunity to change our accounting dates to coincide with the tax year. And I did this with all my clients, encouraging. And I would say, if you are taking on new clients, then a new client who is a new business really needs to start reporting their accounts in line with the tax year. So even if you start on the 1st of January, what you have to do is you have to report a January to March set of accounts anyway. So your year end would be 31st of March. You're reporting your first year from the 1st of January, and then you just carry straight on reporting it. And actually, once we get through this transitional year, it's going to make self-assessment a whole lot simpler. And if you link this in with MTD, it makes perfect sense, because you're doing your income quarterly, say from April to June, and if your accounting year matches with that, you do quarter 1 April to June, July to September, October to December, January to March, and then you have a consolidation, or what they're calling a crystallization. I think how they came up with that idea, I have no idea. It's a crystallization 5th report. Now, at the moment, we've got some issues on who can do what, and I just noticed Kirsty's just put up that I know Werner was appearing in Carol's branch meeting this week, because Carol contacted me and I put her in touch with Werner to talk about this. And we are still working on that as to who's going to do that 5th return. And that follows on from what Gary's just said about the questionnaire, because we are trying to sort this out. HMRC have been told for 6 years now that this is going to be an issue, but they've said, oh no, it's not a problem, it's just pressing a button. But it's who presses the button and who does what is the issue.
Yeah,
so,
and I think also, Jackie, I think it's very important that our members are ahead of the game, because we were saying this for 5 years prior to COVID, that everybody needed to switch to cloud accounting. You know, that's what they needed to do. Had they not done that, COVID would have been a major problem. And it was interesting to see the accountants who had been decrying the use of any sort of cloud accounting suddenly got caught out, were unable to produce sets of accounts for their clients in the proper manner, and they've had to play catch up. Well, I'm happy for other people to play catch up. I don't want us to be doing that. So whatever you do, keep listening in for what we're talking about. Listen for Jackie's notes, anybody else who's here, and make sure that we're all ahead of the game again, because you know, we have to make a win-win out of every situation.
And Carol's just come back. Hello, Carol. He said Werner did mention that bookkeepers will be able to submit the final assessment. Now, yes, we know they can do it. It's not limited to accountants, because individuals can do their self-assessment. And the issue we've got is who is going to be the tax agent for that. And one of these that, and Kat's just said, and at Countex yesterday, HMRC was saying that they were working on letting 2 agents access the same client, but it won't be until 2024. That was at the tax agents meeting last week. Actually, they said that we are pushing for that to be brought forward, because we do have an issue in that first year with who's going to report that. And Werner is working very hard on our behalf, but we are unfortunately up against government funding on that one. And that might be the block to getting this done. So lot going on at the moment. We will keep you in touch with that. But
I
it's
think a few accountants have already said that if they've got to produce 4 returns a year, they're basically going to multiply the current fee by 4. So
yeah,
that's going to put a lot of people out of the accountant's frame and hopefully straight back into bookkeeping.
Yeah, absolutely. Because this issue, funnily enough, I was reading a thread this morning on one of the online accounting forum, newspaper forums, and this was put up as a question by an accountant: is what's everyone else going to do? And it became very obvious, if you follow the thread through, that for those people who just it's the paper bag brigade that they're going to have the problems, because you and your clients, you're doing monthly and quarterly accounts anyway. So the extra cost for you to do a quarterly return once you've checked everything, done all your reconciliations, shouldn't be too huge. But for those who do not use an agent or who just keep their accounts in a paper bag or on a spreadsheet, at some stage that's got to be digitized. Even if it's the spreadsheet going through bridging software, which there will be, you've still got to get the field names at the top of your spreadsheet. There's got to be a particular template for it to be able to upload through the bridging software. And yes, there was a lot. It was, I have to say, there were all accountants on there, some of whom produce monthly VAT returns. So if you're doing an online VAT return, again, it's not a problem because you're uploading VAT returns through software. It's no more difficult to upload your quarterly income and expenditure because it's all there. What concerned me on that, as much as the increase in costs, which is going to be significant, are certain individuals were saying, well, it doesn't matter what you upload each quarter. And I've heard this before at meetings, at HMRC meetings from various other professional bodies, not necessarily accounting professional bodies, I have to say, but other bodies, that representative bodies, that it doesn't really matter what you upload, that it's the year end that is going to do the final thing. But and they're saying, are HMRC going to check that? But so the issue is going to be more for those small businesses who are not VAT registered, who would normally just upload once a year. There's going to be an issue when they have to start uploading quarterly. And if they've got to go to an accountant to do this, it's going to cost them a lot of money. So as Gary said, there's a huge market out here for our members. But what I would say is that it would be really helpful to you if you could do those self-assessment tax returns. We're not saying if you take the exam and then you get a complex client that you don't want to do or you can't do, don't do it. That's fine. But for the majority of the simple businesses, worthwhile seriously considering being able to do the whole thing yourself.
Yeah, there's a lot of business coming out in this field. If you think that our members between them have somewhere in excess of 120,000 clients, there are actually about 4 million clients that are going to be affected by this. Of those 4 million, I gather somewhere in the region of about 1.3 million currently do it themselves.
Yeah.
Now, they will be aided by their software if they've got it. If not, they'll have to get it. But I think a lot of those people are going to say, look, this is just a bridge too far. I need some help. And the best person to go for help is going to be a bookkeeper. I'm talking to the marketing team at ICB at the moment about preempting all of this with, you know, why you need a bookkeeper, get hold of a good bookkeeper, etc. And let's get into this. I am hearing back from some of our members that actually there is a bit of a shortage of bookkeepers at the moment, particularly for them when they want to employ somebody. So we are rapidly talking to all of our training providers about getting into more and more people, because we need to get people through their exams. We need to get them finished off, even if they don't want to go into self-employment, which is where a lot of them want to go. We've got so many already set up practices that want somebody to work with them, you know. So people who want to have the what is seen by some as the security of a paid position, an employed position, there are openings there. You know, I've talked to a few people who said it's really tight out there.
Wow, this has really got you going this afternoon. There's a couple of comments here. Kat's come back and said that HMRC yesterday said we'll be doing the same work in 4 quarters as we will be doing it in one final summary at the year end. Yes, it is the same amount of work to a certain extent, because you've got 4 lots of income and expenditure to put in, and you've got 4 uploads to do. And once you get the information in there, it is purely a touch of a button to upload it as you do your VAT return when you've done it. Caroline has said that I'm worried, as I currently don't do self-assessment, worried that I may lose clients if I can't do this quarterly return. It's a choice not to do essays. Will I have to take the exam? Well, the answer is, if you're going to do self-assessment, you will have to take the exam. But what I will say is, without preempting any decision that ICB might take, is that there are two ways to do self-assessment for a sole trader and partnership. One is to do the accruals basis, whereby you are looking at depreciation, capital allowances, and all that sort of thing. And of course, don't forget that for sole traders, you can report on the cash basis, which means that there are no accruals and prepayments. You're purely reporting on money in, money out as a profit and loss account. And if your turnover is up to £150,000 a year, which is significant for a fairly new sole trader, and once they're in the system, up to £300,000 turnover, you can report on a cash basis. Now that simplifies the self-assessment at the end of the year, no end. And it's one of the things that ICB are looking at with when we start, as we will do fairly soon. As soon as we know that this draft legislation is actually going into law in statute, ICB will be looking at its whole exam structure for self-assessment, and we will have something available for you by the time you need it. I think I can say that quite safely.
I mean, the thought that HMRC were saying in Accountex yesterday that the quarterly updates are just estimates. I mean, that means that any accountant who doesn't have the facility for doing this and isn't going to be able to charge 500 quid or something for having it done can just have an estimate. Then you're not going to bother, are they? I mean, this is ridiculous.
I know. This is the stupid thing about it, because you can do your estimates, because we all know that at the end of the month, at the end of your quarter, particularly if you're not VAT registered, you can still be making adjustments coming through, because we all know that the clients will come up to us, oh, by the way, here's an invoice that I paid for personally. Goes back 3 months. I forgot to put it through. I forgot to give it to you last time. So by estimated accounts, there will always be things that come through later. Now, if you're VAT registered and you do that, you've got to sort of obviously look at the rules and regulations between amending VAT returns and when you can correct a VAT return or just put something in the next return. So that will always happen. And when you're looking at, particularly going back to this transition year, they are looking at estimated accounts for this transition year, because it may be that if your accounts sort of finish, say in December, and you've got to put something in by the January, you may only have to be able to put a set of estimated additional accounts in, which are going to have to be adjusted and re-reported at a later stage. So as I say, please don't start panicking yet. It's very early days, but I did feel it was time, as this is now out in the public domain, to actually start raising this with you so you're aware of this. I think if we can get through to April 24, then the whole thing becomes a lot easier. So my advice to you was to, if you have new clients coming on board and they're starting afresh, get them to put their accounting year in from the 1st of April. It doesn't matter whether you go from the 6th of April to the 5th of April or the 1st of April to the 31st of March. HMRC will allow you to report any of those periods in time. So it makes perfect sense to me to have your accounting year from the 1st of April to the 31st of March. And that's when you report your accounts as part of that tax year. And HMRC are accepting it as part of that tax year.
I think it's very difficult to have the crystal ball to know where this is all going. But if you look at what's happening across the Australian office, has been happening for some time, and I've mentioned it quite regularly. They have something called a BAS report, a business activity statement. Now that's a combination of their pay-as-you-go VAT and their tax, and also whoever bookkeeper accountant is expected to make a statement of going concern to say that the business is trading properly and is going to be okay for the next quarter at least. What I wouldn't like to see is if we follow the same thing over here, and therefore whoever's doing the VAT also does the tax, or does the tax also does the VAT. And we don't want to start getting this fantastic leap forward that bookkeepers have made. We don't want to get that stopped and start moving us back into the corner somewhere and saying, well, you just add them all up and we'll do the real work and we'll charge £500 a time for it or something. Yeah. So we're trying to find out how we're best suited to protect your interests and your futures. It's a little difficult, isn't it, Jackie, at the moment? But we're
yeah. And interesting enough, one of the things, I'm sure Esther will not mind me saying this, she, as I say, she and I have had lots of conversations this week. She was saying that, to be honest, to be thankful that in Hungary, all tills in shops and all software packages are directly linked into the government tax office anyway, so everything goes up. At least we're not going to that stage with it yet. No, we're not. But it's the same in other countries.
Just to nip back to Australia, e-invoicing is coming in, and they're trying to sell it as a benefit to accountants. But the latest report was sponsored actually by Intuit. So I haven't read it yet. I've just downloaded it. So I'll let you know as soon as I've read it.
I think I reported a couple of weeks ago that from next January, Russia is having e-invoices, which have all got to be done and e-invoice from Russia. I think it is I think that's coming in on the 1st of January.
Yeah, so, I think fraud and money laundering are all being used as the excuse for needing this sort of stuff. But basically, the technology is becoming increasingly available. It's getting more extensive. So we've got people sitting in darkened rooms somewhere coming up with new bits of software. That's their job, and they will continue to do this. So we'll have to keep an eye on what's going on with all of that.
Faye, just a quick one. DRC, can you just tell, my brain's gone. Can you just put DRC up for me and then I'll answer your question? I can't think of what it stands for at the moment. And I did notice there's a quick message early on from Lee. Good afternoon, Lee, asking about the report, watching this again because he missed the start. I think it will be on Facebook. It's episode 155, and that's normally up fairly soon after this afternoon, Lee. So you should be able to pick that up fairly quickly. Just trying to see if there's anything else.
While you're waiting to see if any more questions come up, I'd like to just mention that next Thursday, that's the 19th of August, we have a special program on at 2 o'clock. It's an ICB TV. And that will be about the suspicious activity reports and how to complete them, etc. Now, many of you joined in the one that was run by the National Crime Agency, and it was very, very well attended. And those of you who did attend will remember at the end of that, there were a couple of experts on there. One man who was Khurram Javed from the National Economic Crime Centre itself was very, very helpful and unusually forthcoming for a government official. But he's agreed to come and talk to us. So I'm actually going to run the program as a chat. I'm going to ask him questions. I'm going to ask him the sort of things which I know you already want to know. And the notification has already gone out about this. I know we've already got people booked in. So please get booked in for this. There isn't a limit on numbers, but I'd like to know, to be able to boast to him that we've got thousands, hopefully, of people on there. But yeah, so you will get the chance to ask live questions. So if you've got something which has been bugging you a bit and you want to ask somebody, you'll know you'll get the official answer. As I say, last time we spoke, he was very, very forthcoming. He has to be obviously a little bit careful what he says, but he's been very, very helpful to us. So let's get some more out of it. Now, we know from the webinar, we shared that with the Institute of Financial Accountants, but we had about 60% of the audience was actually ICB members. So that's why he's agreed to come and talk to us, because he obviously appreciates we're an audience that's eager for information. But it'll give you the chance to find out what it's all about, because I talk to people on a regular basis, members who are considering putting in a SAR and they don't really want to. They're a bit nervous. They feel guilty, yes, but he's a nice man. I might be, getting into trouble and all the rest of it. There's all these sorts of questions. I'll be putting those to Khurram anyway. But if there are any more there that I miss, just come on, ask the questions, and I think it'll be a great one. And I think, was that Kirsty just come on and says the 19th of August?
I think we've got the wrong year on that, Gary. You've got 19th of August 2022.
Well, yeah, but I'll have to give you lots of time to prepare because I know you're busy. But anyway, all right, I'll take that one up. I was sent a quick proof. I missed that. I didn't look at the date. I just looked at that. Anyway, never mind. I do apologize. Sorry, Kirsty, as always, on your toes there. Well done.
And Lee's saying he can't watch that. Presumably we're recording it and we can watch, people members can watch it later. I think normally Lee, members can log in and watch it. It will be presumably recorded and available for you on our website.
Yeah.
This one goes out on Facebook, but all the others I think are on our website. Once you log in, you can get access to it. We'll just need to tell you how to find it.
It also goes back on YouTube, I found, because I was looking at some records the other evening, listening to some pop to music, and we were sandwiched in between Rod Stewart and I forget who else it was. And there was actually Amy's face on this particular one, but you and I are on a number of them.
Yeah.
But,
it's amazing when these crop up. It very much depends on what software or social media you're using and what your searches are put in on through Google or something, or Firefox, because I'm always amazed that I put a single search up for something, within 5 minutes it's cropping up on my Facebook page on my iPad. So, you know, it's just,
yeah,
I keep up with the change. One quick question, Caroline. Caroline's in a situation where probably quite a lot of our members are, where she does the monthly bookkeeping and VAT returns, but the accountants file the SAT return. And Caroline, do bump me an email across, and I will talk to you about this on a one-off basis. I'd quite like to have a chat with you. But if you think about it, one of the problems with, if we can't get our members, if our members don't do SAT and they don't do the self-assessment tax returns, then they've got to go to the accountant. If you're doing the VAT returns, I wonder, when you come to do the year end, what does the accountant ask you for to do the year end? Because when I've done this, I have to send certain things like the full VAT returns. I have to send the bank reconciliation, list of debtors and creditors, and things like the payroll reports, so that they can check this. Now, if they are doing this at the end of the year and checking all the stuff you're doing, it may be that if you have a really good working relationship with an accountant, that they will take what you do as an estimate, do the quarterly uploads at the touch of a button, but they've got to have access to the software in which to do this as a tax agent, which is going to cause some issues and some problems, because the moment you might send them a spreadsheet with the information and they load it into their tax calculation software. So there's an awful lot going on here.
Yeah, the other thing that we're coming across as well, I'm talking to members. We did a Staffordshire branch meeting recently, and I've done a few meetings recently where people are saying that small businesses are now coming to them with all sorts of different software programs and saying, can you help me out? And some of the members have decided, well, no, unless you use my software, I'm not interested. But I think, we've got to be ultra flexible. If somebody comes to you with a piece of software perhaps you haven't used, I mean, you could be on Xero and somebody comes to you with Intuit, QuickBooks, or vice versa. But you've got to be flexible. You know, if people have invested their time and money in getting this piece of software, they're going to want somebody who can handle that very swiftly for them, because they don't understand what's going on, to be absolutely honest. So don't make life difficult. Learn a new piece of software if you have to. You know, most of them give away free software for the bookkeeper. So if you've got any concerns, speak to us.
I mean, if you can be more flexible with the software, I know some businesses only want to use one software, but if you can use more than one software, it does broaden out what you can do. But the thing I would add on to that is that some of this software that individuals are using might be free software, and it might be a real issue to try to get in and go through it and work it out, because some of these free software are okay for the simplest of businesses, but once you start to get into it, they're not necessarily that straightforward.
No, I was thinking of free software for the bookkeeper, really. I know that.
Oh, yes.
I think Xero do it, Intuit certainly do it. So you don't pay for your package, but it gives you a chance to experiment, teach yourself what you're doing. You can even get certification and put that logo on your website and everything else. I mean, it's really important that you've got all of these badges. Very important you've got hours, because obviously the big thing is going to be you've got to go for a qualified bookkeeper. You've got to have somebody who knows what they're talking about. And so get everything up there. And if you've got a long list of coloured buzzers and bells across the bottom, then that's so much better. You know, you can't close doors as far as I'm concerned. And I know some people are going to say, well, no, I've spent my life learning one piece of software and I'm going to stick with it. Okay. But, you know, you have to be aware that some small firms particularly are not going to be interested in that. If they've been bouncing in and out of their white van but sending invoices immediately, they're going to want somebody who can handle that piece of software.
I mean, Leah's come back and said, yes, the alternative is to advertise yourself as a specialist in, say, Xero or QuickBooks or some, etc. So it's your choice as to which way you want to go. Eliza's come back and said, I do VAT, PAYE, SA, but there are 2 clients that use accountants, and I know that at the year end they accept my TB and just do spot checks before producing and submitting final accounts. Well, that's good, because that's the best relationship you can have with an accountant, because you know that they trust what you do as an ICB bookkeeper, and they're not going to completely want to redo your work. And that's going to keep the software, that's going to keep the cost probably down to minimal costs to your client. And I think if anybody, what I would say is, although it's useful if you could do this, there are people out there, members out there, who we are aware do not want to do self-assessment. And I perfectly understand that. But if that is the case, then what you do need to do, if you don't do this already, is to really try and build a relationship with your client's accountant, obviously with your client's permission, so that you can talk about various things and that they will trust what you're doing and will accept what you've done and won't have to redo everything at the year end and just do the year end. So there are a number of routes forward, but we just want to open up their various options.
Campbell has said, I'm worried about clients that use the self-employed version of QuickBooks. It doesn't allow for capital purchase and the clients just make a mess in it. And you export it to Excel to do self-assessment. Yeah, it gets all very messy.
Yeah, now,
if you've got specific problems like this, I think you need to talk to us, because what we could do perhaps is get a special session with Intuit in this case. I mean, I know we've got Sylvia Borhill, who's one of our council members. I mean, she trains in Intuit QuickBooks, so she might be able to help. But you know, they're very keen to help. Obviously, it's in their interests as well. And Intuit, particularly, I think, has got one of the biggest growths in the small business market. Oh, hello, says Sylvia. Hello, Sylvia. Yeah, they've got a huge growth in this small market. I mean, I've just moved down here, as I mentioned the other day, to sunny Romsey, and so we've taken on a few new different suppliers, and it's surprising. Everybody is now, they've got a computer package, whichever one it is, and you know, that's fantastic. But you've got to be able to cope with that. You know, they're not going to bring you quite the same massive paper as they did before, but that doesn't mean they're not going to bring you a very confused set of accounts that they think they've got correct. So there is work.
What I would say to Claire's comment there, Claire, and again, we can have a chat about this by all means, is that if you've got a sole trader client who's using the self-employed system, self-employed QuickBooks, that's probably based on cash accounting, which is what a lot of small businesses do. And it certainly makes the accounts a lot easier, because things like capital purchases, you're just putting through as an annual cost. Because just quickly to remind you, when you have a capital purchase, if you're working on accruals accounting, you'll show it as a fixed asset, because that's what you've been taught to do, and you depreciate it. But of course, when you come to do your tax return, you have to take out the depreciation and you put through your capital allowances. And at the moment, for the smallest of businesses, every capital allowance that they claim in the year will be the same as if they'd done it on a cash accounting. So for tax purposes, for a very small business, it's not really that much difference between putting your capital purchases through fixed assets and depreciating them, and then when you do your self-assessment, taking out the depreciation and claiming it on capital allowances. It's just a different box, which is why I'm saying if you've got a small client on a sole trader or partnership basis that has turnover £150,000, do consider reporting their tax on a cash basis rather than an accruals basis, because it doesn't half make the accounts easier to do.
Right.
And Esther's saying, talk to your account manager that they're making deals for the essential version for the price of self-employed, basically.
Oh.
So yeah, talk to your clients, talk to software.
I actually met up with Neil and Sylvia Borhill this last week. They Sylvia runs a practice called Another Answer, and Neil has joined in recent years. I'm very pleased to say Neil is going through all of our exams. He's currently working on our level 4. So
love it, Sylvia.
Yeah, he's just working on the business program, and he said he'd let us know what it was like once he completed it. He's working through the books at the moment, but yeah, it's nice to see. We've got quite a few husbands that are joining wives and working for them. At least they know their place, which is good. Great, bit like happens here, really. I do as I'm told. The trouble is I don't do as I'm told. I just get shouted at a lot. Anyway, never mind. That's what.
Dare I say, Gary, as life should be. Faye, I'm still conscious I haven't answered your question because I still can't remember what you mean by DRC. So if you want to bump that back in the question and answer or something, I'll try and answer it. I think it's to do with cash accounting back clients.
Right, I have another announcement.
Yeah.
I have mentioned this before, but just to say that now we have confirmed that the Luca Awards and 25th anniversary dinner will take place in London, actually at the Londoner, and that will be on Monday, the 1st of November, which is sorry to use the word actual, remember the actual anniversary of the formation of the Institute of Certified Bookkeepers. So the Londoner is a brand new hotel and conference complex being built on Leicester Square. It's almost completed. I think it's being launched at the very early part of next month. It'll be a great night. It is, it's a tiaras and bangles night, and the ladies can wear whatever they want. But I'm told there's going to be the normal goings on, including a live band, and there will be special guests. I presume they mean Jackie and me, but perhaps not. There might be others, and I have no idea because I'm not part of it. I've also been asked to say that early next month, so probably a couple of weeks away now, we will be announcing the application process for the Lucas. We're ramping them up even further this time. We've got a nice piece of software which will help you by asking you all sorts of questions, and you can upload all your information and backing material, and then our judges will be able to look straight at that without having to meet somewhere and look at reams and reams of paper and go through a video. So it's all going to be all done online. Amy Copeland and her team are working on that at the moment, almost finalized it. We might have a few new categories. I'm not 100% certain because I've thrown my sixpenneth in, but I've not been told whether anybody's taken any notice yet. I'll wait and see when the list comes out. I shall probably be just as surprised as you are. But anyway, so that's all happening. How are we doing on questions?
Yeah, no, I'm very impressed with you all this afternoon, folks. You are all on the ball. At least 4 people have come back and reminded me that DRC probably stands for domestic reverse charge. I'm so into tax, I hadn't even thought about that. DRC. Cash VAT and DRC, I'd have to think about that one. Brain's not working along domestic reverse charge lines this afternoon, but I will deal with that, and I will go back to Faye directly. I'll make a note and go back to you on that one.
I've just had an email saying, Gary, sorry to see you've cut your hair. It makes you look thin and ill. Thank you very much indeed. I haven't cut my hair. I've just got the phased out background. If I move forward, you can probably still there.
It looks very different, certainly. You look very different, Gary.
Yeah. Well, never mind. But I obviously look ill. I don't think I am ill.
I don't think you do. No, I disagree with that completely. I disagree with that.
See the doctor, I think. Yeah, but anyway, never mind. It's yeah, I've stayed well away from people like that at the moment. Yeah.
One little notice before we finish. I'm conscious of time. Just a reminder: if anybody really wants to dive in at the deep end, I'm going to have an attempt at coping with partial exemption VAT on Tuesday, Technical Tuesday this week. So if you want to join, I know quite a few people have booked in for it already. So welcome to join me on that one. It's likely to raise more questions than it answers. I'll give you that right up front. It's something I've been working on. So we'll have a go at it. And if anybody knows far more about it than I do, then please do volunteer to come online with me, and we'll have a look at it together on Tuesday. So I'm here Tuesday. You're going to have a busy week next week then, aren't you? But all of these technical ones can be picked up again by members at a later stage. So if you can't log in, I know quite a few people wanted to watch it and can't, you can always pick them up from your My ICB by logging into the website and gaining access there.
Now, I've just been prompted, are we doing any films this week? Yes, I've been avidly watching films this week, not actually because I wanted to give you films to watch yourselves, but just because the bad weather just had to make it more necessary. So just to quickly whiz through them, The Mule by Clint Eastwood. It's another written, directed, everything by Clint Eastwood. He plays a sort of a 91-year-old man, which he actually is. I'm hoping that his weird stance and shuffling is acting rather than what he actually now looks like. But anyway, it's a great bit of fun. There's a few here actually about people are getting older. It's just a coincidence, I can assure you, although from what Jackie's been saying, it's probably that somebody at Netflix has worked out how old I am. But anyway, it's about a man that gets to the end of his time. He hasn't got any money saved, so he decides to start trafficking drugs. But it's quite funny, but it's a real story, as most of the things are nowadays that Clint Eastwood does. So look at that. We then have The Founder. Now, those of you who are thinking of building a big business and want to know how to do it, this is the true story of Ray Kroc, who claims to be the founder of McDonald's. Actually, McDonald's brothers, the two McDonald's brothers, invented the McDonald's burger and everything else, but this guy sort of took over and made it what it is today. But just have a look at it. It's a really fun film, The Founder, with Michael Keaton. And there's a particular emphasis on the trouble that he has trying to make sure that all of the outlets maintain the highest quality standards. So, I can understand and I can go with that one too. Then there's Wild Oats. Now, this one has got Shirley MacLaine, Jessica Lange, Demi Moore, and Billy Connolly in it. It's nothing to do with what you would think Wild Oats is anything about. It's about a woman, Shirley MacLaine, whose husband unfortunately passes away. She's expecting a check for 50,000, but a check for 5 million comes through the post. So she decides to go abroad and spend it, and all sorts of funny things ensue, including a very strange meeting with what to me was a bit of a bad acting Billy Connolly, but never mind. I'm sure he was trying to look as if he was acting badly, but never mind. But that's quite good. And finally, The Women. Now, this is about 4 friends: Meg Ryan, Annette Bening, Jada Pinkett Smith, and Deborah Messing. Deborah Messing, she's actually Grace from Will and Grace, if you don't know who Deborah Messing is. And they're 4 friends, and something happens to one of them. Candice Bergen plays a very funny mother to Meg Ryan, the main character, and involved in there is Eva Mendes, who is the other woman, so that'll give you an idea of what goes on, and a couple of people just popping in, including Bette Midler and Carrie Fisher. And there is something unusual about this film, so if anybody's seen the film and knows, before we disappear, come back with the answer and I'll tell you whether you're right. Otherwise, just before we say cheerio, I will tell you. So, The Mule, The Founder, Wild Oats, and The Women, all good fun.
Members of,
none of them are going to upset you.
Everyone, the people are coming back. Knives Out with Daniel Craig. Is that the one where he's a Southern detective with a really broad Southern American accent? Because if so, I've watched that one. Took me a while to get into it.
Like that.
Knives Out. I love this cat. My niece brought Frozen 2 and subjected me to it. Not sure it's in my top 100 films. I'm actually waiting for we've got tickets to take all the youngsters in the family to see Frozen on stage. And I'm not sure when we're going. It's been put off so many times. I think it's probably October, November time.
Pauline Chapman said, I love Frozen 2. So, well, there we are.
And Faye, I'm sorry. I noticed you did put the answer up for the DRC, but I hadn't scrolled my screen, so my apologies for asking for it again. I will come back to you separately on that one, Faye. I think by now my brain is scrambled, so I don't think I'm going to be able to give you a decent answer. I'll call you next week.
Right. I think
we've covered The Dry on Now TV and Sky is very good.
Peter James says, agree, Founder is a great film. Kiwi 66, just watched that film, fab. Not quite sure which one, but yeah, okay. I like a nice, easy film. I don't like to go to bed at night on edge. I have enough problems. So it's good to get one of those. What else have we got there? Anything?
Oh, Bates Motel series is brilliant. ICB TV for the Thursday is not on the website. Thursday the 19th is not on the website yet.
I think it's just been taken down because he put the wrong year on it. So we have had a note. It was a genuine error. I won't say who made it, but his name was Alex.
It's I told you it's Friday the 13th. What do you expect? Something's got to go wrong, you know.
Exactly. Right. I think we're probably done on that. So just to tell you then,
I think we've answered everything.
About the film, The Women, is actually there isn't a single man in it. It's all women, but it's all done very well, and you don't actually miss them until you're about 3/4 through and think, that's what's missing. And you keep thinking what's going to come around the corner, but they don't. So have a look at it. It is actually, it's a nice film, and it takes you into areas that I know a lot of our members have been through, which is, trying to reinvent themselves, which is really good fun. And great. So I think that is probably about it. What time is it? It's 10 past.
Good session. Thank you.
We've had a good innings this week, and I think a couple of people have now started to disappear. So I think we've had our time, Jackie. They've had enough.
I think so. I think an hour on a Friday afternoon of you and I is probably more than most people could take, Gary.
So Tuesday, it's Jackie with the Technical Tuesday. Thursday, it's me with the SAR program. And then Friday, well, we'll be thanking Furlough yet again that it's Friday, and we will see you all then. So have a great weekend. Look after the kids, and we'll see you soon. Bye, everybody.
Bye. Take care.